All right, what's up, traders? What's up, tycoons? Super excited for today's video. We're going to break down the market. Now, SPY right now, if we look on the left, we have our daily time frame. We're already well above the weekly expected move, and we are very close to reaching double the expected move this week, and it's already only Wednesday. So, if this bullishness wants to continue, it's very possible we could see 453. But do remember that 68% of the time, the market does close within this weekly expected move, right, within this range. So, while the bulls have been present right now, and if we take a look at the internals for today, we're seeing the ad, the volt, and the tick all above zero and closing above zero. Um, you know, it's very possible we continue this bullishness again today, as of now, with how the internals are looking. But there's some things we want to be cautious of, right? If we look at the put to call ratio for the S&P 500, it's at a level right here where things could be a little bit too bullish, right? And basically what I mean by that is we're looking at the put to call ratio. And, once it gets down below here, it was at 0.5 earlier today. That may just be a sign that, hey, maybe people are a little bit too bullish and the market could be due for a little bit of a pullback, a little bit of some mean reversion. We've basically gone outside the expected move 2 out of 3 of the last weeks, last trading weeks. For right now, we are still trading within range. We're in our opening range here. We're trying to push out higher, so it's very possible, again, we continue this bullishness if we can get above 450.75 and stay above there today on the SPY. As I mentioned, some of the market internals look pretty green here. Okay, at the moment, again, we're seeing positive uptick here in the ad. We're seeing a positive uptick here in the volt. The tick also looks really well. Everything's closing above zero at the moment, and we're seeing the S&P 500 futures push higher right here. But before we go any further, I do have to say that the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. All right. If you're new to the channel, I started a newsletter for you guys. It's completely free. There's a link in the description to sign up, giving out free trade ideas, as well as free valuable content. I try to sprinkle in 1 or 2 trade ideas a week. Right. And these are what the trade ideas will look like. Okay. Not all of them are long positions. Some of them are short positions too. Okay, such as this one here on SWK, rising wedge, highlighting, where we are looking for the price to come down to. The last few trade ideas have been really, really amazing. We'll take a look at some of those real quick and head on over back to Thinkorswim. And so here we are on Thinkorswim. One of them was Roblox. Okay. One of the most recent trade ideas was Roblox, had this nice cup and handle forming here. We're targeting the gap fill up at 37.5, and it absolutely exploded past those price targets there. So, if you like free trade ideas, you'll definitely like that newsletter. You can always join the investment intelligence Discord as well. There's a couple stocks that we've really been looking at here in the Discord, Carnival Cruise Lines being one of them. Okay, CCL, we talked about, we've been talking about this one for a while since it was back at the $11 price area. Just last week, we were talking about how, hey, this is forming a possible inverse head and shoulders right here. And that move played out very, very well. If we take a look at CCL today, it's still pumping. CCL is just absolutely been raging and is still going higher currently, even as we speak. If we take a look at some other ones here, right, you can see that those Carnival calls are doing very, very well. Etsy is another one as well. That one also was in the newsletter, right? And if we just come here and take a look at Etsy, Etsy, the setup is very clean and it's potentially going to break out of this trend line. Now, if you're entering in the lower half of this demand zone, it's been a very good trade. But when you zoom out to the weekly time frame, you don't necessarily want to buy right at a resistance trend line. But when you take a look at this weekly candlestick here, it's a very, very nice weekly candlestick, right? Huge, huge, green candlestick right here. We'd like to see some continuation to the upside. Overall, this has been a long-term zone, long-term area of interest. Prior resistance becomes new support. And we were wondering, the big question was, will it become new support again? And can we break out or will it break down below? As of now, it's showing signs of support and consolidation and trying to put in a bottom. right? Here we have the S&P 500 breaking through the opening range now, continuing to push higher as those internals suggested. But you want to be cautious swinging things right now, okay? Not only because of that put to call ratio that we looked at, maybe things are a little bit too bullish right now to be getting into new money long swing trades for some stocks. If you take a look at the what I like to call the market pulse. All right. And if we just take a look at the US dollar right here, the US dollar definitely is in a bear flag right here currently at the moment. Okay. So you see the move down, kind of a bear flag, something like this. Okay. I know it's pretty sloppy. Don't kill me. But the dollar is having a, pretty nice push up here today, as well as 10-year treasury yields, right? The 10-year treasury yield is also pushing up here. Again, it could be a bear flag, for further bullishness to the downside. But we haven't really seen the stock market pull back. If we take a look at the S&P 500, the S&P 500 is not really pulling back here while you're seeing the dollar and US Treasury yields continue higher. But you are seeing TLT pull down, right? This is TLT right here. TLT is down, no surprise, with the 10-year being up almost about 2%. And then you also have gold down, again, no surprise, with the 10-year and the dollar pushing up. So, things are making sense in certain areas of the market with a rising dollar and a rising 10-year yield. You're seeing gold and TLT pull back. Meanwhile, the S&P 500 is just continuing to rally, right? And I think a large portion of that on an intraday basis is we can take a look at the internals, all right, and the advanced decline line. We can take a look at the volume up down, the vold, the add, the tick. Again, all of those are closing above zero, continuing to go higher here. So, on an intraday basis, right, we're having a nice little push up here, but you do just want to be cautious, all right, overall, trying to swing into, add new money longs here if you haven't already caught a lot of this move to the upside. Okay. We can see the SPY is starting to pull back a little bit right here. We'll see, from an intraday standpoint, a really good potential setup you can look for would be, a breakout retest of the opening range and then push higher, and you can have a stop slightly below the opening range here. This script right here, all of these scripts, they are actually available in the Discord. If we go back to the Discord, pretty much everything that I'm going to show you guys today is available in the Discord. But we have the put to call ratio script. We have the previous day opening range script. We have the present day opening range script, previous day highs and lows, right? You can combine a lot of these scripts together. We have the internal script for vold, add, and tick. Lots of really nice things in here. But there are some other metrics that I want to go over with you guys, right? If we take a look and try to see if the market is in defensive or offensive, this is a really good setup that I like to look at. It's a ratio chart of high beta to low volatility stocks, discretionaries to staples, credit spreads, and then we have biotech here as well. All right, and if we take a look at all of these, we're seeing lots of confluence, right? So this move behind the market has been justified, right? This is the S&P 500 on the top here, and we're seeing 4 out of 4 tick higher, right? We're seeing the high beta, low volatility ratios tick higher, discretionaries to staples, our credit spreads measurement, and biotech is all pushing higher, right? So 4 out of 4 is really showing you guys that the market has been truly offensive and that this hasn't really been a fake out rally, right? And so that leads a lot of people to suggest and really think that we're going to get this seasonality for the S&P 500, right? That would take us to new highs towards the end of the year, right? This is the seasonality in purple, and you can see we've been following it. The S&P has very, very well, right? We've made new highs, then we pull back right around the same times. We get a pullback in the summer here, pullback in the summer, and then we make new highs. The S&P front run that a little bit this year, right? And we were supposed to make highs over in August, but we ended up topping out in July. And then, the pullback extended a little bit farther this year after we front ran the highs than, the seasonality would have suggested. But we're still following it pretty well overall. And after the most recent pullback, we would actually be looking for new highs, right? And so again, when we take a look and we see if the market is defensive right now, or if it's offensive, the market is clearly offensive. Okay, so it's justified in that standpoint. If we were to take a look at some other metrics right here, and we were to take a look at the Dow Jones transportation is very important. I mentioned this in a previous video, but basically we really needed to see the transportations break out here. All right, and they have done so, which is very, very nice to see. And the reason being is because the Dow transportation can often be a leading indicator for the market, right? And what do I mean by that? Well, we have the transports here in the middle, and the transports topped out before the Dow Jones Industrial and before the S&P 500 did, when it reached all-time highs. And then it also bottoms before the Dow Jones Industrial and before the S&P 500. So when we came to this point where we were potentially going to break out here, we really wanted to see all three of these break out, which is exactly what we got, and not 2 out of 3 with the Dow Jones Transportation breaking down, right? Most recently, it broke support before the Dow Jones Industrial and the Dow Jones and the S&P 500 broke support. Again, another leading indicator that potentially we're going to see further downside in both of those sectors and both of those ETFs in indices, right? If we were to go ahead and take a look at things like TLT, all right, TLT often can be a leading indicator for the market as well. We won't spend too much time on this, but it's pretty cut and dry. You have TLT on the top, S&P 500 on the bottom, and whenever these two are diverging, oftentimes it's a leading indicator. So TLT was making lower highs while the S&P was making higher highs. That's a leading indicator saying that the stock market could be due for a pullback, right? And we saw that happen again and again over the past year. And most recently, we saw the S&P 500 making lower lows while TLT was making higher lows, suggesting that the stock market was due for a rally, right? That was one of our leading indicators that helped us to get in, and we caught the whole rally, from 2-3 weeks ago. All right. If you want to look at the 4 pillars, okay, we were also talking about the 4 pillars of the market. And we were saying, hey, we're seeing semiconductors breaking out, we're seeing tech breaking out, but we really needed to see the industrials and the home builders break out, right? And so, when you combine a lot of these things together, okay, again, here we're seeing 4 out of 4 breaking out, right? We were a little bit more cautious and hesitant because we were only seeing, 2 out of 4 breaking out. But now, again, we've seen the industrials breaking out right here, and we've seen the home builders breaking out. So all 4 of these are breaking out. This is showing lots of confluence and strength in the market. If you notice, the semiconductors held support and tech held support, but what broke down was industrials and and the home builders. And once we had 2 out of 4 of these breaking down, that's when we saw a lot of downside movement in the stock market. And it wasn't really a big surprise because we weren't seeing, all 4 of these 4 pillars move in the same direction. Okay, but now we are getting that, and we're seeing some nice price movement in the stock market. If we take a look at the SPY, okay, it's back within that opening range. I really wouldn't be surprised if we see lots of chop today. Okay, PPI came out, as I mentioned before. When we go back and take a look at the SPY, we already exceeded that opening, or the weekly expected move. So, again, 68% of the time, the market is going to close within this range here. And so we may not have to, okay, but for us again to basically double the expected move, these are extremely rare occurrences, and we've already seen it once in November. And we're not even through the month yet, right? And so for us to do it 2 times in 1 month would be an extremely even more rare occurrence. So don't be surprised if we do see some chop, if we do see some upside continuation. 453.55 is going to be a pretty key level right there. That could be a zone where we top out. Ultimately, though, the call wall is 460 at the moment. So, it can even go past this, right? I mean, let's say some type of news catalyst comes out overnight. It can go past 453. 460 is going to be that call wall where it will struggle with. But don't be surprised also if, Thursday and Friday, if we start to get a little bit of a pullback and come back down to that 447.08 range, 447.08 area. Okay. That's it for today's video. Just wanted to give you guys a quick little update. All of those flexible grids that we were just looking at, those are also available in the Discord. So, when I say that, when I talk about the 4 pillars, okay, you guys can come in here and just click on this script right here, import it into your thinkorswim, and you guys will have the 4 pillars. When we talked about TLT and the S&P being a leading indicator, this chart right here will be imported into your thinkorswim. the market internals. When we talk about the market internals, we also have some Magnificent Seven things in here. You can take a look at the Magnificent Seven versus the S&P minus the Magnificent Seven. Lots of really good stuff, as well as all of the different analysis. So you guys can see basically, what stocks, what plays that we're looking at, different things like that. There's a link in the description to sign up for that. Don't forget to sign up for the completely free newsletter, okay? Investment Intelligence. You can get access to that using the link in the description, and that's completely free to you guys, giving out free trade ideas and free content as well.